Well, good afternoon. Good afternoon and welcome to another Webinar Wednesday hosted by Cal State Bakersfield Small Business Development Center. This is Webinar Wednesday number 357. We are live from the state of Florida today. Interesting. Maybe I'll tell you a little bit about that. But we got a great guest today, a very unique way to get capital for your business. And let's get started. And as mentioned, we have a great alternative funding option. It's an option that we've mentioned a lot of times. I'll prove it. We've mentioned it a lot of time, but we've never discussed it. We've never got into details. We're talking about leveraging some of your own resources and some of your monies, actually your retirement funds, to actually start a business. So we'll get into some of those details. You have maybe heard me say once or twice that it isn't something that we advise clients to do, but you know what? We see it so many times. We see it more times than you would actually recognize. So you might as well do it right. And that's what we're here to do, is to try to get it done right today. Another thing is we're going to look at leveraging. We're going to just talk a little bit about leveraging right now. And that's using the funds that you can access from your retirement to leverage other people's money in the form of a bank loan. Maybe you're buying an existing business and you're leveraging some seller financing, but maybe it's use a smaller amount of your retirement funds and really kind of leveraging other monies that are out there. Wonderful advisors of SBDC can help you do that. So that's kind of a few things Capital Corner. We'll jump into a little bit more. Our Economic Corner kind of looks at some entrepreneurship trends, and we have a really unique Economic Corner today, I got to tell you. So it's a little bit of our flavor this week, being in Florida at the National ASBDC, Association for Small Business Development Center training event. We'll see about a little bit other news and information and some resources to help your business thrive. We will take your questions. We'll take your questions live after today's presentation. So if you have a question, put it in the Q&A box. If you happen to put it in the chat box, don't worry, we'll come back and we'll revisit the chat box and see if there's anything in there. And talking about the chat box, our Webinar Wednesday producer, Maureen Busher-Dang, will be working the chat box and putting in some resources that are available to you. So yes, we got you covered on the messages, on the chats. We got you covered on the Q&A, and we got no poll today. It says we got a poll, but I think that there's a lot of information to go through today, and why bog it down with one of my polls? So let's move along. And let's start, as we often do, with Capital Quarter. And our Capital Quarter is a slide that we have shared many times with you. It's really kind of a slide that lists a lot of the different ways that people can find money. Is there money for everyone? Well, I've answered that question a million times. I don't believe there's money for everyone, but I think that there are a lot of creative ways to fund a business, like we'll be talking about today. And really, finding capital for your business is really limited to your own creativity, because look at the different sites and different opportunities that you have here. Now, I'm putting this slide up here today because I know you've seen it, but also let's go down to the arrow number 6, which is something that we've slid past, talked about a little bit, but it's basically using owner retirement funds, either from an IRA or 401k, and then actually turning that into a legal C corporation that actually allows you to avoid some of the taxes and penalties with that transaction. I know you do it anyway, so let's do it and make it as painless as possible on you. So that is kind of where we're recycling back to, is there money for everybody today, is because it's something that we have mentioned a lot, but never really discussed in great detail. Well, you're going to get that great detail today. And you're going to get a look at my favorite big, beautiful bill. And there it is again. Woodrow Wilson still looks like a former FBI director instead of an ex-president, former president. But the $100,000 bill, way to get capital, and we're going to be looking at that today. So our Economic Corner, our Economic Corner, we oftentimes will feature our Webinar Wednesday economist, Dr. Mark Evans, but not today. We're going to actually go outside and really get a few slides on a little interpretation that I heard today from, one of my favorite non-Cal State Bakersfield economist, Mr. Michael Brown. And he is with Visa International, one of the sponsors of our event this week. And so he is actually made a presentation this morning. I stole a few slides. Don't tell him. But there he is making his presentation a little earlier today. The wonderful pictures that I took today from the back row, of course, because you all know I hang out in the back row. But one of his slides dealt with something that we've talked about on Webinar Wednesday a lot, and a lot over the last probably 5-10 years. And that has to do with the National Federation of Independent Business, their optimism report. And it's how optimistic are our small businesses. And if, there's the ratio right there. You see the spike around the election and then keep back down. So you see kind of a lot of things that were moving up and down, really a lot of optimism for small business in November of 2025 that kind of went away. But one of the things that I really liked about this slide was it showed a graphic depiction of some of the concerns and how they go over time from last year to this year. For example, this year, one of the biggest concerns has been taxes. And, there were some small business tax provision in the Big Beautiful Bill Act. And so maybe that is what spiked the concern in taxes, wondering if those were going to be renewed, which they were. A lot of the other ones, as far as the cost of labor and government regulations, actually have gone down a little bit. The concern over inflation dropped substantially. As you see, that was the biggest issue in 2024, and now has dropped to nearly half of the level where it was last year. And also then jumping into the quality of labor, which isn't as much of a concern as it was last year. So interesting information, I thought, on that, considering we had talked about that on some of our previous Webinar Wednesdays. He also mentioned that entrepreneurship remains strong in the United States, which is good, at least from our perspective. And you see kind of the rolling chart from 2020, from around the pandemic to current. And, the average for that period has been, 5.6. So, and that is basically the share of those who are self-employed. So interesting analysis there. And also a little chart next to it that really shown the business application by type. So, and by type was high propensity and non-high propensity. So kind of interesting information. And where's entrepreneurship the strongest? So you see the dark green, the very, very dark green, Pacific Northwest, state of Wyoming, represent areas and states that are very strong right now. Now, and with our small business or our business environment in California, which is, oftentimes viewed by many of our small businesses as not being very favorable, I would really want to kind of dig into this and find out more information. And, Visa's a Northern California company. So if I can get more information, I'll share that on upcoming Webinar Wednesdays on why California is such a weak entrepreneurial state at this moment. But there's where the strength lies, and it's surprising that it's mostly out west in the Pacific Northwest and the Rocky Mountain Range. So that's a little bit there. You do know we work with the workforce development boards and the California Employers Association to provide help to employers. If you have any particular questions, do reach out to those phone numbers that are listed. And these are brought to you by your local workforce development agencies. So in Kern, Inyo, and Mono counties, the 3 counties served by our CSU Bakersfield SBDC, you see a number 888-201-5817, and other counties located up the San Joaquin Valley, along the Central Coast, and into the Sierra Mountains and Eastern Sierra Range are listed there. So contact them. We vetted them, got outstanding results. Our toolbox at the SBDC, we have a lot of toolbox and we're proud of our tools. We'll mention a lot of those at times. One of them that we talk about fairly frequently is our YouTube. Our YouTube channel hosts the CSUB SBDC YouTube channel. And right now, the YouTube channel is actually hosting about over 300 videos. There is kind of a video list of our most popular ones. We put that one up for a change, going with small business lending, about 13,000. An IP strategy, how to use AI to write a business plan. So if you go over the 300, there are the top 12 most popular viewed webinar Wednesdays on our YouTube channel. We are up to 470 subscribers. Subscribe and watch it on demand. And right now, if your friend came in and offered you the opportunity to go to lunch, and you thought, no, I got to hang out for Webinar Wednesday, blow us off live and check it out on demand. The big, beautiful Bill, I can't get enough of this guy. I don't know if I'll ever not have a Webinar Wednesday that does not have it. Again, our wonderful sponsors, the County of Kern, Blue Tech Valley program, the Clean Tech program in 36 counties in California, our College of Business and Public Administration at Cal State Bakersfield, the SynCal Business Finance Group. Of course, we're powered by SBA and the Office of the Small Business Advocate for the state of California. If you need some assistance, please reach out for confidential, no cost, no obligation consulting from expert consultants. And I do mean experts. They know their stuff. So sign up at our website. We'll arrange an initial consultation. There's our website. One of the greatest acronyms ever. Of course, I am extraordinarily biased. CSUB for Cal State University Bakersfield, SBDC for the Small Business Development Center. It all equals CSUB-SBDC.com. Oh, I just had to look at that one more time before I introduce our special guest today. And today's special guest is Mickey Parker, who is a certified public accountant and co-owner of Kansas consultant Accelefund. Oh, boy, I got a frog in my throat. Okay, while helping small businesses with funding, Mickey came to realization many business owners, particularly those with fewer than 10 employees, thought they were too small to offer a 401k plan. So they thought the cost to start and maintain a plan was too expensive. A roll-up-your-sleeve type of financial who has helped many entrepreneurs through the year, and Mickey now helps clients follow their dreams to start or buy a new business by funding it with their IRA, 401k plan. Mickey's a graduate of Kansas State University, held life and health insurance licenses in, 22 states. Volunteer business mentor. He's also meets with entrepreneurs to provide practical, track, and day-to-day professional advice. Mickey, it is so glad to have you on Webinar Wednesday. Come on in here and take it away.
Thanks, Kelly. I appreciate it. Really, and appreciate the invitation. Glad to be here and glad to be live here in Florida at the SBDC training event. I'll jump right in. What we're going to talk about today, we will show you how you can use your 401k IRA as capital to start or buy a business. The big part of that is doing it without paying taxes or penalties. Enough of me. Kelly went through that with you as well. A general comment that I find in most states is people don't realize what benefit a small business really provides to the state economy. In the red part there, virtually all new net jobs come from small business. So it's really important if that's something that you're looking to do. It's going to help not just you, but it's going to help the entire economy of the state. The most common reason that people don't start a business is generally, if we find the lack of funding, lack of financial resources. I like to add into that, it's not just the lack of resources, it's the lack of education on those resources, because what I do, most people don't know you can do. So that's part of why we're doing this webinar today, is to provide that education on a source of funding you might be able to use and didn't know about. The most common sources of capital when somebody want to start a business. You know, they'll tell you to go to friends and family, perhaps get home equity loans, bank financing, credit card. You know, bank financing isn't an option if you're a startup. Generally, there's not going to be a bank that does that. So we're going to fall on down to personal savings. And what most people may have is their own IRA, their own 401k, or other types of accounts. You can take a distribution from that. You can perhaps take a loan from that. But what we're going to talk about is a rollover for business startup. It goes by the acronym of ROBS. I like to call it as you're really bootstrapping with your own 401k or bootstrapping with a K. We'll go through this fairly quickly, but if you take a distribution from your retirement account, that is a taxable event. You're going to pay federal income tax, you're going to pay state income tax, and if you're under 59 and a half, you're going to pay a 10% early withdrawal penalty. That eats into the amount of cash you can actually use from your 401k. You can avoid that if you use a ROBS plan. Taking a loan, generally that has to be from an existing 401k, but there are limits on loans. It's usually $50,000 or 50% of your vested balance. It does have to be repaid in 5 years with quarterly or at least substantially equal payments. Sometimes those are monthly. So on a $50,000 loan, you're going to pay approximately $11,500 in annual payments. And that's cash that's coming out of your new business that you really probably need to grow your business. And again, there are certainly instances where a loan from the 401k is a good option. We just show that there is an option to avoid having to make those kinds of payments and stay away from debt, or perhaps stay away from debt by using the ROBS plan. So what is the ROBS? It is it stands for rollover for business startup. It allows small business owners to use their pre-tax retirement funds to start or buy a business without paying taxes or penalties. You know, I look, if you have a 401k plan, you may have various options shown on the table there on the right. What if one of those options was stock in your own corporation? You could take your 401k and actually invest it in stock of your corporation. And that is, in fact, what a ROBS is. If you would want to start your business debt-free, not pay taxes or penalties on a withdrawal from that retirement account, it does provide an equity investment in your business. There's no repayment required. You're not signing any notes. It's not interest. And it is or can be used as an equity injection for an SBA loan. So you want to go buy a business, you need that equity injection that the SBA is going to require, or your SBA lender is going to require. A ROBS is an option to provide that equity injection. Oftentimes, if people hear using their retirement account, they think or may think of a self-directed IRA. A ROBS is not a self-directed IRA. The biggest differences are that with a ROBS plan, you can actually manage your business. With a ROBS, you actually pay yourself. And with a ROBS, you actually own 100%. Typically with a self-directed IRA, you can't manage the business. You're simply an investor. You can't pay yourself. Again, you're simply an investor. And you are not allowed to own more than 49% of the business within a self-directed IRA. We normally see that with angel investors. Angel investors may very well use a self-directed IRA to make a minority investment in a business. We look at ROBS as being a 5-step process. Number one, by IRS rule, the company that is funded by the ROBS must be a C Corp. That C Corp then adopts its own retirement plan, 401k profit sharing type plan. You would then roll your money from whatever plan you currently have, IRA, 401k, into the new plan. Once the rollover has taken place, you're going to say, I don't want to invest in traditional investments that we saw on the previous slide. What I want to do is invest in the stock of my own corporation, and that would be the C Corp that was just formed. And the funds actually get transferred from your retirement account to your company's checking account. So at that point, you now have funded that C Corp with retirement funds, and you haven't had to pay tax. No distribution took place, so it's not a taxable event. Your stock in your business simply has become an investment option within the new plan's 401k. So really a 5-step process. Generally takes about 2 to 3 weeks to complete that process. There are 2 variables that we, as your provider, don't control. One is how long does it take for your state to incorporate? In a lot of the states I deal with, we can do it online and it's immediate. I think I just looked up again, California is running 7 to 10 days, I think, behind from an application standpoint. They will allow you to pay, I believe, a $350 fee to expedite that and get it done, I think, in a couple of days. So that's one, is just how quickly the state will incorporate your business. The second is how quickly your current custodian will process your request for the rollover. Again, if you're dealing with the major brokerage houses, the Fidelities, Vanguard, Schwab's, those types of folks, it's generally not that much of an issue. I have had some issues if we deal with some of the smaller plans, and they don't want to let go of the money so much, so they try to make it as hard as they can. I always get the question, why do I have to use a C Corp? And it's a very simple. The IRS says so. It's written into the code that to allow this to happen, it has to be stock of a business. And that's the definition of qualifying employer securities, is stock of that employer. So an LLC doesn't issue stock, so it cannot be an LLC. An S Corp does issue stock, but an S Corp cannot be owned by a retirement plan. So the only thing that would qualify for qualifying employer securities is a C Corp. Tax issues, 21% flat tax on a C Corp. And sometimes that may be, in fact, lower than the combined pass-through rate, federal and state self-employment on like an LLC. One of the issues that's always comes up with C Corp is double taxation. We generally don't see that being an issue because most of our clients are not paying dividends. That usually happens when dividends are paid, where the corporation pays taxes on their income and then the shareholders pay taxes on dividends. We're generally not having dividends. If a company has excess funds, we encourage them probably to pay some bonus, pay some additional salary, or they could begin a stock buyback, use some of that cash to redeem some of the stock that they originally used. So it allows them to put some of that money back into their retirement plan. So what's the process to set up a ROBS? Use a ROBS provider. That's one of the things I do. There are not a lot of us around the country. There are a couple of large providers, one on the East Coast, one on the West Coast, and a few others. But find a ROBS provider. They can guide you with some of the issues that might come up for your specific type of business that you want to start. The setup fee is normally around $5,000. In our case, we charge $4,500, but it's generally around $5,000 for most providers. The upfront fee is usually there for most providers. We don't require all of it upfront. Because of the fee, all providers generally have a minimum rollover, and that's $50,000. That's really just to make it economical. It's not worthwhile to pay $5,000 to do a rollover of $20,000. You'd be better off going ahead and taking a distribution and paying the taxes on that. Let me see, administration. The administration of the retirement plan generally runs $99 to $150. And what that means is when your company creates a retirement plan, you've got to have a third-party administrator who's going to provide those types of services. So generally $99 to $150, and that range depends on the type of plan that you choose. There is a tax credit out there that's available. So if you do a ROBS plan, make sure you talk to your CPA, make sure they're aware of that tax credit, and you get that on your tax return. By far the biggest question I ever get is this legal? How in the world can I use my retirement account and without having to pay taxes and put it into my company? It's written into the code, quite honestly. The private company retirement plans became effective in 1974, but really what started the ROBS process was in 92 and in 2001, the laws were changed to allow rollovers to an IRA or to a new employer's plan. Prior to that, if you left a company that had a 401k, you had to just leave it at that company. Now you have the ability to do the rollover, and that's what allows for the ROBS plan. Normally, if a company is trying to do business with its own retirement plan, such as buying stock, that would be a prohibited transaction. But there are specific exemptions in the IRS code and in ERISA that allows the employer stock to be an investment option in the plan. So that's why this is legal. It's actually written into the code and has been for decades. The IRS started taking a look because this became popular in the early 2000s. In 2008, they started looking at these plans and found some issues with them and issued some guidance. And we use, and other ROBS providers really use that as kind of the framework to make sure that we're compliant with the ROBS plans that we create. I won't go through this slide, but it's a common slide that I would provide to CPAs or attorneys. Sometimes I'll have a client, we'll do a conference call, and the CPA says, I don't know anything about this. This doesn't sound right. So we'll provide the actual code sections, ERISA sections, and these specifically say that a plan can purchase qualifying employer securities without being in violation of the prohibited transaction rules, what the definition of an qualifying employer security is. So again, won't go through each of those, but here's the actual code sections that allow for a ROBS to be done. What retirement funds qualify? Really anything that's pre-tax. So if you have a 401k, 403b is generally nonprofit. 457B are government plans, IRAs, profit sharing, SEP, simple, even government thrift plans. The big issue here is you don't have to roll over all the funds that are in your existing account. You can use simply what you need. So if you have more in the account than what you need, just roll over what you need, start your business with it, and leave the rest where it's at. There are certain accounts that cannot be transferred to a ROBS, a Roth IRA being one, and an IRA inherited from a non-spouse. So if a rich uncle happened to leave you as the beneficiary of an IRA, that would not be available to be used in an IRA. I'll get the question periodically. I don't want to quit my job. I have a side hustle. Can I fund that with my ROBS plan? And it really depends. And it depends on your current employer's plan. Most plans do not allow you to take money out prior to you quitting that job. But there are exceptions. So I always encourage potential clients, to check with the HR department or Fidelity, Vanguard, whoever the custodian of their retirement funds are, and ask the specific question, can I take any portion of my account and transfer it to another qualified plan while I'm still working? Again, the most common answer to that is no, you can't. But I have had clients who have asked that question, and they surprisingly learned they were able to take a portion of it. So if you're not planning on leaving your job or don't want to leave your job immediately, this is a possible option. You can start virtually any type of business with a ROBS plan. It has to provide goods or services. It's not intended to be a holding company. It's not, you don't want to put money into the C Corp and turn around and use the C Corp money to invest in other businesses. It really needs to provide goods or services. Certain things are not recommended. Being a direct lender, which is similar to receivables factoring, or passive investment. I have a number of clients who may ask me if they can purchase multifamily, an apartment building. And the answer is you can certainly use a ROBS to buy an apartment building as long as you're actively going to manage it. If it's a passive investment, a ROBS is not the best option. You probably should take a look at a self-directed real estate IRA, and if you're not going to be actively involved. But if you're going to be actively involved, then a ROBS could be a possible option. And in a self-directed IRA, you cannot be actively involved. So it's really a good option between one or the other. The majority of our clients over the past 20 years have actually been California corporations. We do business across the country, but here's just a few examples, and I guess I want to bring some to your attention. Multiple people can do a ROBS. A husband and wife can go. A wife can put part of their IRA. A husband put part of his IRA or 401k. I have a brother and a sister here in Florida where we're at who used it to purchase a barber shop. So multiple people can go together and put money into a ROBS. You can also put personal money along with ROBS. So if you say, hey, I've got some money personally I want to put in out of my savings, but I want to supplement it with the money out of my retirement, that can also be done. Using the last one on there as an example, the equity injection for an SBA loan. You can, I think in this example, it was $1 million business. They needed 150,000, a 15% down payment for IRS, or I'm sorry, for SBA requirements. And so they added some working capital. He ended up rolling over 188,000 into a ROBS plan, use that as the equity injection for his SBA loan to be able to buy this $1 million business. In this particular case, that company generated such a significant amount of cash over the next 2 years, he actually redeemed the stock back out of his retirement plan. So within a couple of years, he now personally owned the stock, but he could not have been able to do it without using his retirement plan money in the beginning. One of the things we really talk about with people who are considering doing this is what are some of the requirements? The person that rolls the funds over must be a bona fide employee of that C Corp. They need to receive some type of W-2 compensation, and that compensation should come from the revenues of the business, not transferred funds. Going back to one of my original slides talking about the IRS memo, that was one of the things they identified back in 2008, that some people were simply rolling the money over to a ROBS, but then never actually starting a business, but then started paying themselves. So it became an issue that the IRS didn't want to see happen. The other thing is staying away from what's called prohibited transactions. And I really spend a lot of time with potential clients talking about what kind of business are they going to do to try to stay away from this prohibited transactions. And a prohibited transaction is primarily self-dealing, meaning you don't want to do business with yourself or related entity. An example would be someone uses a ROBS plan to buy an apartment building. That's fine. They're going to be actively managing it. But the minute they tell me they want to live in one of the apartments, that would be a prohibited transaction. They're personally benefiting from something that the retirement plan has invested in. Another example is I had a client who had a very successful existing manufacturing business. One of his biggest expenses was trucking. He wanted to use a a ROBS to go start a trucking business. And which is fine. He could do that, but the biggest client of that trucking company was going to be his own manufacturing company, which he owned personally. So that would have created a prohibited transaction. He could have started a trucking company and gone off and gotten other clients, non-related clients. He would have been fine. Because his company was going to be a client, that would have been a prohibited transaction. So I always encourage you to talk to your ROBS provider about exactly what it is you're going to do so that we can try to make sure we steer you away from a prohibited transaction. Oftentimes people have already started a business, so then they ask the question, can I capitalize an existing business? It's certainly possible, but remember the IRS ruled that the company that has to be funded by the ROBS must be a C Corp. So unless you have an existing C Corp, probably not a good option. I have had a couple of clients who formed a C Corp, took their LLC and contributed it as capital to the C Corp so that the C Corp owned the LLC and then funded the C Corp, which funded the LLC. We are not involved in the day-to-day advising of that type of thing. If that's something you want to pursue, talk to your talk to your CPA and see if that's a viable option. And we can certainly help once you decide that may be an option for you. We're getting a little in the weeds here, and I don't want to spend too much time, but the types of plans you can set up is a profit sharing plan, a 401k type plan. And I think this is a little bit underestimated in the benefit of using a ROBS plan. You can now turn around and start putting money back into the plan as an employee. If your company makes money, you may want to make a profit sharing contribution to the plan. And if you are the only eligible employee, that entire contribution can be allocated to you as the owner. So not only are you able to use it for the startup, for the capital to get started, on the backside, you can start taking advantage of any profits that the company makes and start using that and put it back into the retirement plan. When you have a retirement plan, there are certain requirements. This is part of that maintenance fee that I mentioned earlier, the monthly third-party administrator, the types of things that they do for you. And generally, most ROBS providers provide that support service. Things like compliance testing, the filing of some annual forms, benefit statements, summary annual statement, those types of things. So your ROBS provider will usually act as your third-party administrator. So how do I get out of a ROBS plan once I get it funded? Generally, there's three things that are going to happen. You can use company or personal funds to buy that stock back from the plan. Remember, it's not a loan, it's an equity investment. So the IRS rule when you buy it back is you must buy it back for no less than fair market value. So if the value of the business is gone, if you put 100,000 in to start, but the value of the business is 300,000, for you to buy that stock back and personally own it, it was going to take 300,000, but that 300,000 is going to go back into your retirement account. The other option is you're going to sell the company. Usually that's an asset sale and not a stock sale. So the proceeds of the sale are going to go into the company checking account. Once the company has all cash, you paid all the bills, all the taxes, anything that may be due, whatever cash is left in that C Corp is actually transferred back into your retirement plan, and then in exchange for the stock. Kind of the opposite of what we do in the beginning, where we take the cash from the plan to the corporation. Now we're going to turn around and take it from the corporation and put it back in the plan. Of course, we always have, there are a few that the business doesn't work, and therefore the stock becomes worthless and the plan gets terminated due to the company being insolvent. I do want to throw this example out. Again, getting a little deep in the tax side, but if you were to do something like this, it does tell you what options may be available. This is actually a California client. He used $102,000 to start a metal glass fabrication business back in 2007. It's currently valued in the 2.5 million, 2.6 million range. what he's going to do normally, if he took what's called an in-kind distribution, he would have to pay tax on the full current value, the full $2.6 million. But what the IRS has a strategy called net unrealized appreciation. He can take an in-kind distribution of that stock, only pay tax on the original 102,000 and defer the tax on the rest of it until he actually disposes of the stock. Now, I know that can be confusing. The retirement plan owns the stock. He's going to take a distribution. When he does that, he's going to now personally own the stock, but he's going to have to pay tax on that original $102,000 investment. If he holds that now personally for over a year, once he disposes of that stock, he can get capital gains treatment on that unrealized appreciation. So it's a way to minimize the tax hit on the growth of a business. Now, most ROBS providers are not tax advisors, so we've had a number of people do this. We're always working with generally their legal counsel to make that work. So quick summary, ROBS is a financing solution. It allows prospective business owners to invest their retirement funds in their own business. The big thing is that's done without having to pay taxes, without penalties, and without taking out a loan, although it can be used as a equity injection for the loan. There are specific guidelines which we touched on that need to be followed to make sure that this is a compliant transaction, and certainly encourage you to work with a ROBS provider to make that process simple. I mentioned Accelefund. We are a ROBS provider. We help business owners nationwide. We also provide educational seminars. So if anyone is involved in a chamber or an organization that says, hey, I think my group would be interested in knowing more about this, they ought to know more about this, then we're happy to try to schedule some type of a seminar where we can teach them the ROBS process. Again, here's my contact information. Don't hesitate to reach out. I spend the vast majority of my time in the educational role. Just somebody calling me saying, I've heard about ROBS. What can you tell me about it? And we'll spend time with them and go through this process and make sure that they understand what a ROBS is, does it work for them, and what the next steps are to proceed. So appreciate it, and thanks so much. And if you have any questions here, I'm more than happy to answer them.
Fantastic stuff. Boy, that was good. Good information. Well presented, Mickey. So yeah, let's get some questions rolling in here now that we're right here. Yeah. So, first of all, I got to say something, Mickey. We're at our national conference. See, I'm legit, AI certified, AIU certified. But this is what I want you to see. I really was impressed by Mickey's company. Accelefund is a sponsor of actually the name tag on the back side. Now, that might not seem very brilliant because, nobody sees that, but your name tag. But if you've ever worn one of these badges, they always flip around the other way. I've ran into hundreds of people that I swear are named Accelefund today. And I'm thinking, that's a great idea. So I just wanted to point that out to you, the little marketing that you did here at this event.
Well, we appreciated the opportunity for the SBDC to allow that. And, my thought too, in addition, was, these advisors that are here are going to go to their hotel room and eventually go home. But if they're like me, I end up having these laying around my house. So we have a QR code on the back, so they can go check out the QR code even once they leave the event.
Okay, so I know Maureen, our marketing expert. I know she's going to approve. So anyway, never seen that. Saw how effective it was, and let's get to your questions. So we'll answer your questions live here on the air. So if you have it, go to the Q&A box and put it in. The first question is, I have some familiarity with this. Are there any limitations on how you can use this specifically with real estate?
Again, the big one is you cannot do it passive. You need to be actively involved. So if you're going to buy a commercial property and you're going to be actively involved in managing that property, that's fine. If it's intended for a passive investment, then ROBS is not the best vehicle.
Our next question is, how many times can I roll over into the new ROBS account? For example, can I roll over in smaller chunks over a couple of years? But if I don't need a large sum at the initial first year?
That's a really good question. And I would love to be able to say you could do it as many times as you can. And I guess I really can say you do that. But the requirement, again, by the IRS is when your plan invests in the stock of your company, it must pay no more than fair market value. So you're going to be required to get an appraisal of your current business every time you want to put additional money in. We generally will give you a 90-day window, particularly on startup. So if you put some money in and 90 days later, you say, hey, I need some more, then we'll probably do that on the same valuation, particularly if you're not really started or just still in the early stages of that business, the value probably hasn't changed much from startup, then we'll do that. But if you get a year down the road, and now I've had people do that, I've had people come back to me a couple of years later and say, I need to put my business is growing, I need some additional working capital, I want to put some more money in, and that's fine, but it does require to get an appraisal of your existing business to see what the stock is worth at that time, so that when the retirement plan buys stock, it's buying it at the current fair market value. So you could do it as many times as you want, but you're going to pay an appraiser every time you do it. So we generally say roll over a little more than you think. If you think you're going to need more, put it in a company checking, in a company savings account or something, or put it aside instead of having to do multiple rollovers because of the extra cost of the appraisal.
Okay, moving on to our next question. I hope I can get this out correctly, but it's with a spouse. What would happen if I passed before it wound down? Would she be kept separate with the ROBS or from the ROBS?
The ROBS is just like any other retirement plan. You will have a beneficiary designation. So if you have designated your wife as the beneficiary of your retirement account, then upon your passing, she will take over the benefit of your plan, which would include the ROBS or the stock in the corporation. The retirement plan would still own it, but she would control the account. So she would either try to continue the winding down or probably have legal or CPA counsel to help in the wind down of that ROBS.
Okay. Mickey, you mentioned that if you initially active manage a ROBS, what do you need to do when you decide to delegate and take a more passive role?
That's a good question as well. There are certain questions that I would ultimately probably defer and suggest you hire an ERISA attorney to answer that question. And this might be one of them. I think you can grow as long as you're still involved in the business. But I mean, that's what you want to do, right? Is grow the business, start delegating some. There's nothing that says you personally have to be involved. Your company has to be involved. It can't be a passive investment. So I don't see that there would be an issue with delegating that as your company grew.
Fantastic. Still time for some more questions that you need them answered. Please go there. In the meantime, what we're going to do is we're going to jump over to the chat box and see if we collected anything in there. And so in the chat box, what we're seeing is some greetings and salutations. Our subscription to our YouTube channel at CSUB SBDC. Start, grow, advise your business. Check out the SBDC. You'll see Accelefund, Mickey Parker CPA, his contact information, ways to contact him after today's webinar. And also, if you enjoyed today's webinar, hey, leave us a Google review. If you didn't, call me up. I'd like to talk to you. So that's the chat. And let's see, circling back to any of the other possibilities of questions. And it looks like, no more questions. So Mickey, final thoughts.
Well, I think the biggest thing is just letting people know that this option is available to them. It's not always the right option for everyone. There will be people who say, I don't want to use my retirement account. You shouldn't use your retirement account. That's not for me to decide. So the presentation is really intended to make the option available so that you and those in the audience can decide if it's a good option, if they want to pursue it.
Mm-hmm.
I spend a lot of my time on the educational side. I'll have somebody call me and say, hey, I heard about ROBS, tell me more about it. And I'll spend a lot of time on the phone, and it may ultimately not be the right deal for them or the right funding option. But if it is, at least they've heard about it, they know about it, and can decide whether they want to do it or not.
Yeah, and from the SBDC perspective, my final thoughts are, we see a lot of people, as I mentioned, that do this, but if you're going to do it right. And really, I really go back to the leveraging factor. And I think Mickey had an excellent example of the SBA loan where you actually use the proceeds to actually leverage that other capital. And it could be leveraging a larger amount like it was on that particular deal, or a smaller amount, but then you're using less of your retirement funds and you're using more of other people's money. And let's face it, we all like using it.
That's awesome. Yes.
So we can help you do that. And I think that's a wrap. Webinar Wednesday,
Thanks so much, Kelly.
in the books.
Appreciate it. Appreciate the opportunity.
Here in Florida, I could go see Mickey speak tomorrow and with 100 other people. But, I just got my own little personalized seminar webinar right here, as you did on Webinar Wednesday. So bonus for us. Okay, that's going to wrap Webinar Wednesday 357. We'll be back next week. Next week, we're going to have a special guest from the county of Kern. We're going to have Stacy Kuhara, and also who's the the chief operating officer, and also the chief workforce development officer. Brandon Evans will join us, and we'll talk about some of the incentives, some of the programs that they have at the county that can help your small business grow. So for this guy over here who is disregard what you're reading there. This is the man. This is Mickey Parker. For Mickey Parker, I'm Kelly Bearden. We'll be back next week. Everybody have a great week. So long, everybody.